Hi everyone. So I'll be talking about Payment Orchestrator, aka Clean Ledger. Earlier it was called Clean Ledger System. However, I think because of too much of confusing terminologies, now we are calling it Payment Orchestrator. So I'll start with what are the primary goals of this Payment Orchestrator, what are the core concepts, which also translate into code. We'll do an example run through one of the payroll approval scenarios. I'll also talk about other edge cases that we took into account. And then we'll talk about the credit ledger system, which is when we overpay to a certain agency, say tax agency like IRS or state tax agency, etc. What should be the flow or what happens in this system? And then I'll give you some references that we can follow later on if there are more questions. Also happy to take any questions in between. So what are the goals? So primarily there are three goals of the system. So basically, two of them are actually pretty similar, but yeah, all the payments should go through this system alone. So now this allows us to have a single system that can give us the entire view of what is going on in Rippling. What are the payments that are due in the next few days? What are the payments that we are going to receive in the next few days, etc. So it gives finance team and other executive team a lot more confidence into what is going to happen in terms of money inside of the firm. Then figuring out company balances. So until now, I think we have seen multiple scenarios inside of Rippling where sometimes ledger entries got processed twice, and so we made overpayment to the agency, or uh, other things where we process a payment to the agency. However, we realized later that we had not received money from the original client, or often I think we have seen recently a lot more scenarios where client had paid a certain money, we were not able to remit it to the third party that they intended to, be it an employee or something else, and then we show something on their to-do list. However, given that they cannot they they often have too many to-dos, they don't take any action, and the money remains with Rippling. Also, there are other scenarios where client might send us a wire, and it would remain in the system and unmapped, and then the client says why it was not refunded or things like that. So the one of the primary aims could be basically incoming inflow from the client should be equal to the outflow as long as it is not the fees. So basically it should be two-legged every transaction. One should be incoming payment and another should be outgoing payment. And then we also wanted to achieve this automated reconciliation goal, which was a part of V2. We wanted to build it upon what Abhay had already built as part of bank ledger entries, where we are reading the bank ledger entries. So BAI PD file and BAI ID file. I think one is intraday and one is post day. So we try to parse those files and try to match our ACH transactions to that. So there are two kinds of reconciliations that are inspired from modern treasury also. So forward reconciliation is every transaction that is initiated by us. We created an ACH or a wire object or something else. We should be able to find it within the bank statement. That helps us ensure and doubly check that the transaction that we initiated went through successfully. And another one is backward reconciliation. So every item that appears on the bank statement, it must be mapped to certain transactable object inside of our system. So basically, maybe our bank statement has more line items than the transactions we initiated. Then this can be immediately flagged because it is uh, as a like malicious transaction or whatever, and slowly we can try to reduce these malicious transactions, which are like transactions which are flowing outside of the system. The primary goal is the system should provide an entire overview of the things going inside of Rippling money wise. Now, what is a transactable object? It can be one Rippling initiated payments. So Rippling creates ACH and wires, right? And with ACH, you can debit the client or credit the client. But these are both Rippling initiated. Similarly, wires which Rippling can use to pay to certain third parties is another thing which Rippling initiates. But now there are things like which other third parties can initiate. Like other third parties can pay Rippling via wire. They can also initiate ACH transactions on their behalf. Like there are certain tax agencies which say you just set your bank account in a certain way and they'll debit your account. So basically, in such cases, we also want to be able to create that there is we are expecting a debit via ACH from certain entity. Like this is an expected ACH debit or an expected ACH credit or an expected wire credit, which we can then map to whenever money flows into our account. We can say, okay, this has been reconciled. But this part would require a lot more effort to build. This part is something we can extend from what Abhay had tried to build. We'll obviously have to reduce the false positives there because a lot of BLEs currently don't match any wire or ACH transactions. So are we clear with the goals? I
Yeah.
take that as yes. Okay. So some of the core concepts within this ledger system or the payment orchestrator. So basically, there's something called a liability record. How I think about it is an instruction to the payment orchestrator. So something that user of the payment orchestrator should give the orchestrator. Uh, Using this instruction, we create a instruction record, which we are calling the liability record. And now, given that I told that this is a two-legged system, the execution has to be doubly legged. So the execution of this manifests itself as a funding record and a payment record. Funding record is where we are trying to debit the client, either debit the client or creating an expected wire or an expected ACH credit that we are going to receive from the client, because all these transactions in a way are funding Rippling's account. Once we receive money, we also want to pay out the money, remit the money to the external party, which can be expected ACH debit. It can be an ACH credit to a third party, or it can be a wire payment that we send to the third party. So uh, now the mapping between these records are basically any funding record can uh, so basically any liability record which is an instruction will have reference to only one funding record and only one payment record. So basically this is like one to many, and here also it's one to many mapping, or many to one from liability record to funding record, and many to one from liability record to payment record. uh, is this clear?
Can you please explain this part again? This mapping part.
Sorry, what part do you want me to explain again?
Like relation, like one to many, like
Right.
just.
So yeah, so basically let's say a client has a liability, or an employer has a liability to pay uh, three of its employees, right? So basically the three instructions that we expect to receive are uh, company A wants to pay employee E1 $20, employee E2 $20, and employee E3 $20. Now each of this, like as we execute this instruction that we have received from the user of this payment orchestrator, we want to attach how this execution was done. So once we debit the employer or the company, we'll create a funding record to debit them. And once it is debited, this money is now with Rippling. So this liability record needs to uh, keep a reference to what or how did we actually debit money from the client. So it will basically store a reference to this funding record. Now, because we don't want to debit the client too many times, often it is the case that we'll combine these $20 liabilities into a single ACH debit or a single funding record. So basically, one liability record can have reference to one funding record, but a funding record can be referred to by several liability records. Because in this case now we had three liability records, right? We combined all these $20 debits into a single funding records when we debited the client. And so uh, now all the three liability records will store the reference to the same funding record.
Okay.
Is it clearer now?
Yeah, this part is clear.
So, okay. The payment records are one to one to the liability records.
No, not actually. So I can give you example where the payment record is also not one to one. So let's say
Mm,
in a quarter from January to March, the company ran
mm,
4 payroll runs. For each payroll
okay.
run, because of the payment to certain employees, it withheld the FICA tax that it wanted to pay. Now, FICA,
Mm,
maybe it has a quarterly deposit frequency. So
mm,
when the client, or when we on behalf of the client want to pay to the IRS the FICA overall for the quarter, we want to make a single payment to the client, to the tax agency for the FICA money. So
okay.
across
Okay.
payroll 1, 2, 3, and 4, we actually created 4 liabilities. Client has to
Mm,
pay FICA of $5, then $10, then $10, and then maybe $5 again. So a total liability of $30. So we want to pay it as a single payment to the IRS. And so we'll say
okay.
that these
Uh,
4 liabilities
so
actually.
uh, here one question, Prakar. So how do you combine multiple liability records as one funding record, or multiple liability records as one payment record? On what basis? Is it only based on the uh, source, like the source account, not source, the target account, and the check date, or is there any other parameters
Hmm.
that you
Yeah,
do?
yeah, I think this is a nice question. So, basically, for funding, it is very straightforward. So, usually, our users don't really have a preference of how should we debit the client, because it is sort of based on, we are only debiting companies, and it is based on our relationship with the company. So, once we establish that, it is sort of similar for all the teams around. So, what we do is, for debiting, we'll basically combine all the liability records which are pending from the previous day, combine them based
Mm,
on, group them based on the company ID or the CTI ID, not the company ID, sorry, the
mm,
CTI ID, and the purpose. So purpose here could be, now the liability records that I was talking initially about were created for purpose payroll, because they were paying
mm,
to the employees. The FICA related liability records would be created for the purpose taxes. So there is a
okay.
broader term purpose, and then there can be a sub purpose, which I'm calling the
Mm,
secondary purpose inside of the system, which is like
mm,
just to understand what the what is the actual purpose, but it's still under the label of larger taxes purpose, right? And
right.
similarly, so basically, at the end of the day, we can just group all the liability records from the previous day by company
Mm,
ID, CTI ID, and purpose, and then debit clients into major chunks, basically like payroll, taxes, garnishments, and maybe billings, filings, whatever.
yeah, right.
Uh,
That we are
for
doing right
payment
now.
record, yeah, for payment record,
Yeah.
this is slightly tricky, because this is when the users of the payment orchestrator want to give their own preference to us. Because now, FICA might have a deposit frequency of quarter, whereas FUTA might have a deposit frequency of something else. Like, I'm guessing that is also quarter. However, it could have, uh, hypothetically
Mm,
speaking, it could have a deposit frequency of a month. So basically,
mm,
all the payroll runs within the same month should be paid together. FUTA for all the payroll runs within the same month should be paid together, whereas FICA for all the payroll runs within the quarter should be paid together. So now
so,
we want to give clients, the users of the payment orchestrator, the flexibility to group it as they like, right?
mm.
So
So
one
whom
example.
the flexibility? Sorry, whom do you give? Like it's fixed, right? The TICA, all those things. Those frequencies comes from tax agencies to us, right?
Correct. So tax agencies to the clients, but yeah, in some
Yeah.
way, I think PTM is able to figure it out, and so
Okay.
PTM tells us basically based on the deposit frequency and the client ID, etc., when is
Okay.
the payment due. But uh, yeah, ideally it could be different for different clients also. So maybe because clients are based in different states, maybe peak
Mm.
SUTA for one state is monthly, SUTA for another state is quarterly, and for a third state it could be half yearly.
Yeah.
Yeah. So I'll talk about how we give the clients the flexibility to do that. So, I wanted to run through this payroll processing example, where I'll also give you the idea of how we give the clients the flexibility to group things. but also tell you what are the liability records actually created, because until now I was talking hand wavy terms, right? Liability records will be created when a client wants to pay certain entity A, etc., and all that stuff on a certain date, certain amount. But what are the ones that we actually create during payroll processing? So ER is liable to pay the employees, pay the garnishment on behalf of employees, and pay FICA, FUTA, SUTA, SICA, Medicare, etc., all separate taxes combined across all employees. So if there are 10 employees, the employer should pay FICA across all the employees once, FUTA across all the employees once, SUTA across all the employees. So he's liable to pay SUTA for all the SUTA combined for all the employees, right? So
Right.
if the employer is not paying it 10 times for an entire payroll run, the employer pays it once.
Once.
Yeah. So basically, one liability record would be created. So basically, when the employer wants to pay the employee, we create the employee number of liability records, because for each employee, the counterparty, which is the employee receiving the money, is a different entity, and hence we create the number of liability records, which is equal to the number of employees in that company. For each garnishment that the company pays on behalf of the employee, we create the number of garnishment across all the employees' number of liability records. So basically, if there are 5 employees, first one has 2, second has 3 garnishment payments, third, fourth, and fifth have 0. Then we'll create 2 plus 3, which is equal to 5 liability records. So right, and now for the employer is liable to pay certain taxes to tax agencies. For this, we will create the liability record number of liability records here would be equal to the number of distinct taxes that the employer is supposed to pay, because FICA and FUTA might be due on different dates also, right? So we segregate those as well. So here we'll say the FICA for the employer for the payroll run one is $30, FUTA is $20. So two different liability records. SUTA is $10, third one. SICA is $7, fourth one. Medicare is something, let's say $11, fifth one. And so if there are more taxes, there will be like more number of liability records which are
So you are
created.
saying the last records are not dependent upon the E's.
Correct.
Like what?
Number of EE does not dictate how many liability records are being created for taxes.
So you can say this liability records, like just for an internal question, like a ledgers. Right now we have a ledgers where we create ledger to employee, ledger to something like that. It is somehow we replace those ledger systems with these liability records, and the actual payment funding records are ACH and
So I'll tell you
wires.
one nice place where ledgers
Okay.
are not helpful, but liability records are. So
Okay.
let's say the employee was being paid $10 first, and then in the same minute or second, another payroll run got approved where he was supposed to get paid another $10, and maybe because of certain dues, we were supposed to deduct $5 from it. Now, if we create these three kinds of ledger entries to employee, we'll first transfer him $10, then transfer him $10, then get back $5. If we combine all the three ledger entries to employees, we'll transfer him 10 plus 10, 20 minus 5, $15 in all in a single record. However, then we lose the trace of why was this $15 created, and who will do the mathematics. This was combined because of all three runs, or different kinds of reasons, or maybe some other chargebacks, etc. So
But we have
with liability
record.
record, we will always create 10, 10, and minus 5. And now
Right,
when
right.
these are being combined into a payment record, we can say the net of this is like $15, which is being paid to the employees.
So you'll have a reference of funding record on the liability records.
Yeah, each liability record will contain one funding records reference and one payment records reference. Liability records are the most granular records, basically.
Granular, right? Yeah.
Right.
Okay, gotcha.
So funding cannot ever come in chunks smaller than liability record.
Got it. Obviously, yeah. Nice.
So secretly speaking, it can. Uh,
Hmm.
we'll talk about it. I can give
Uh,
you a case because let's say okay, but I will still not create funding record multiple funding records. So example is let's say for a payroll run we created a funding record for uh,
hmm,
let's say there was just one garnishment and we created
hmm,
a funding record to debit the company for garnishment with let's say $100. Now if the client
hmm.
wires us $50 and $50 or $25 and $75, that's basically
Hmm.
coming as less money, right? But we'll create just one funding record and it should ideally match to all the payments, which are incoming payments, incoming transactables, basically. Uh,
Okay.
is it clear? Am I being too confusing? Should I
No,
repeat?
no. Like, so you're saying we create a funding record of, sorry, we create a liability record of $100 for a garnishment for a EE, but the
Mm-hmm.
employer have transferred us in some chunks 75, 10,
Correct,
and
correct, correct.
60
So
transfer.
the funding record still remains one only, is what I'm saying. It should
Still,
ideally not.
yeah,
We created one funding record of $100. Will not break it down. Well,
yeah,
so the liability record will contain reference to only one funding record in this case also.
yeah, got it, got it. Yeah, however, they created us, but okay. So those objects, like it's only possible when they fired us, right? It is not when we initiated a transaction. You got it,
Mm-hmm.
right? My question.
Yeah,
So
yeah,
basically,
yeah.
if we debit via ACH, it's not a problem. Like most
Correct,
of the cases won't be,
correct,
but only when they send us.
correct.
So those cases we have to handle it somehow.
Yes, that is right.
They'll be,
So
another level of objects. Then,
Yeah.
how are we storing these transactables? Like it's a one funding record, right? And let's say it
mm,
came as 75 and 25, two wires, or
Mm-hmm.
maybe one wire, one ACH. So how we are storing that?
Yeah. So currently we don't have the second part of it, where we we don't even have an expected ACH or expected wire in this context. Like we have an expected wire in our code base,
mm,
which is from like the older sense expected wire, but for this case we don't. But how we plan to do it was basically the transactable can contain references to uh, funding records that it is funding, right? Basically there can be a transactable and then there will be a transactable usage record which is storing where is it getting used. So a transactable usage record will contain a reference to a transactable as well as the funding record as well as the amount how much is it funding, because now so we spoke about where one or more transactables were funding the same funding record, right? But there could be
yeah.
cases where uh, one transactable is funding more than one funding record. Basically we had $150 funding records, one for taxes, one for garnishments, and the client says,
Mm,
hey, take here $150 altogether.
Hmm.
okay. So where do you store which one? You store
So
funding
right
reference
now,
master.
the expected payments is not a part of it, but the idea was that we'll
Mm,
have one transactable like for expected payment.
mm,
Let's say we create an object. Now there should be an
mm.
expected payment usage model. I think I've committed a commented version of
So,
it, but yeah,
so
expected.
one more. Okay. Yeah,
Sorry,
one more
go ahead.
question.
Yeah,
Why do we need expected payments here in this sense? Like right now, we replacing it with funding. I got what you're saying, but why can't we create some other model? Like right now, let's say they wired us. We are creating the pending incoming wire. Sorry,
correct.
we are
We are creating
we are
pending
we are cre-
incoming wire.
yeah, we are creating pending incoming wire objects. So
Mm-hmm.
so they can be used directly, right? Let's
I
say
think
the
it is okay to use them directly, but the problem is the
mm,
expected payments are something. So basically, when you create expected payments, it's more like your expectation that a payment will come. And so when pending incoming wire is there, you can map it to that expected, like we do it today also, right? We are saying
right.
that we expect this payment to happen, and we expect certain wire to come.
Yeah. So
So in fact,
that
we
can be
could have
made
used
as
expected wire itself instead of using
okay.
pending incoming wire.
I
I
mean,
use it.
that can be made as some property in funding object itself, right? Let's say there is a failure of
No,
funding.
right? Because there can be more than one expected payments which are coming also from.
Oh,
So you're
okay,
saying we create one expected payment, and now expected payment can be fulfilled by multiple incoming wires. You're saying.
right.
We can do
So,
that, but that is pushing the problem a little ahead only. But okay, I think
okay,
I don't disagree.
okay. So your concept is what you said?
No, we
We
should
create.
ideally have that expected payment thing, and then there should be more than one or more objects which are fulfilling that expected payment thing. So,
Okay,
but storing a list is not sufficient because from those number of expected from those incoming payments also we might take only a fraction of the
mm,
money to fund this
right,
expected
right.
payment. Yeah, so we'll
Got.
either store a list of tuple, which is
Mm,
one is reference and other is amount, or second is
mm,
we start creating a usage record which stores this expected payment that so
mm.
it stores the incoming payment, the expected payment, and the amount of incoming payment being used to fund the expected payment. That is what I
So,
had.
okay, that is great. Like you having a usage record is simplifies the process, like no confusion. So in this case, let's say we are expecting a garnish payment of 100 rupees. We are expecting the incoming wire. Okay. So in that
Mhm,
case, we don't even create a funding record, right? That's what
mhm.
you're saying. We only create expected wire object. That's it.
No, no, we'll create a funding record, right? The funding record needs to have a reference to expected wire or something.
Okay. It will have a
What's
reference
the
to.
exact model name, Prakhar? Like
It,
expected wire is the
there is
current
no
model, right?
expected, yeah, there is no expected payment that is there in the code. That is part of this second backward reconciliation where expected payments were supposed to match. So basically, when you reconcile expected payments, they'll be reconciled using bank statements, right? But right now, there are no expected payments. That is part of a V2 that we had planned earlier.
Okay. So you have added just LR, like liability record, funding method, and payment
Funding
method,
record,
right?
payment record, right.
Payment record, yeah. Three
Yeah.
models, right?
And yeah, these models are supposed to draw creating, are supposed to create the ledger entry from company to employee from employee, etc.
Right. And like for supporting that backwards reconciliation, we need to add one more model that is expected usage, which can like refer to just one funding record, or it can be like mapping to multiple funding records depending on how client sent us the money.
So
And
my thought was there will be an expected payment. So basically funding record can reference to either an ACH debit or an expected wire or an expected ACH credit. So
Mm,
these are the three things that a funding record could reference. And
mm,
now, so basically we could use a generic reference field and allow these three classes. And uh, now, once you have this expected payment, now the expected payment could actually be funded by multiple sources and fraction also.
right.
So basically, they wired us $10 and then they wired us $15. So total of $25. So this expected payment can store references to multiple transactables. So
so
only
we
when
will
this
store it as a model, right?
oh,
Like one of these
oh,
three things.
correct,
Either
correct,
it's
correct, correct,
expected wire or expected ACH or ACH.
correct,
It will be one of three.
correct.
What are the three? Sorry, ACH expected, and that's it, right? Two only, right? Funding can be having ACH or expected.
No, ACH can be a credit also. Like in case of same day termination, we initiate the ACH debit from the client later, but we make the outgoing payment first. So in that case, it will be like expected ACH. Is
That
that right, Prakash?
That will
no, I
payments,
think
right?
no. So okay, I think funding records also have a funding due date. It is currently incorporated. So it should raise if the if we have not received the money that we are expecting by that due date, an
Okay.
ETA can raise that. The thing of expected ACH was basically someone else is initiating this ACH. So
Okay.
when another company has or another tax agency has the ability
Oh,
to
third. Got it.
create an ACH transaction, they could say, right, hey Rippling, don't worry, we have created an ACH transaction to credit your account for $30.
So that is even happening. That is even
So
possible.
this is ACH credit is slightly unlikely, but ACH debit is something that tax agencies do even today. They say, hey, just set up your account in a way that you don't block our ACH debit, and we'll debit you for the amount. Is it
Uh,
clear?
okay.
Yeah, like I'm just trying to summarize. So ACH is when Rippling is initiating the ACH debit,
Correct.
and expected ACH is when third party is initiating the payment. It can be either credit or debit. One
Correct.
example of debit is a tax agency has the capability of debiting Rippling's account. But like we currently don't have use case of ACH credit. Like no one is just
Correct.
crediting ACH in
Correct. Correct.
our
Correct.
account.
Yes.
One more question I have. If they're debiting through our account through an ACH, in how it can be in the funding? I mean, so
No, it
funding
will
is
be in the
some.
payment. It will be in the payment. So when
Ah,
so we want to pay to the tax agency, right? So the tax, we can either wire them the money, we can either uh,
hmm,
send an AC, we can either credit them via our
yes,
initiated ACH, or they can say,
hmm,
hey, we'll just debit your account via ACH.
got it, got it, got it. That is for in the payments, not in the funding.
Correct.
Yeah, got it. Right.
Yeah.
Mm,
So uh, you were saying something, Ravi?
no, no, nothing.
I just have one final question here. So I got this hierarchy. Liability record has like funding record and payment record, and then we have this ACH, expected ACH, and expected wire. So are these or like subclasses of expected usage in a sense, like the jargon you were using earlier, like you were mentioning expected usage, right? Like
No, so
because one.
basically, expected usage or expected fill. So basically, I can talk about how I incorporated credit records in that case. But yeah, basically the idea was, let's say, you have, uh, let's say you are expecting $100. Now, let's say a incoming wire, pending incoming wire, is let's say $50. Uh, and another one is, so at least in the world of things now. So let's say, okay, you got 150. So currently what we'll do is we just break this wire into 150, right? If we use this
Hmm.
approach, then we don't have to use that expected uh uh expect filled the amount of expected object that was filled. Because now we can take this $100 ka expected pending incoming wire and map it to this expecting $100. But if we were to design a system where we were not breaking this into artificial wires, in that case we would have to have something like a pending incoming wire. Let's say this was called P1. So we need to store somewhere where we have records like P1 comma E1 comma 100, right?
That will be called usage record, right? P1, even 100.
Yes. Now I'll give you another example. Let's say we are expecting $100, but we got $50, and then we got another $50.
Hmm.
Now our current approach to this is basically we have a in the expected wire we have a list of pending incoming wires. So there is one pending incoming wire, and then we have additional pending incoming wires. Uh, yeah. So here we store this pending incoming wire 50 50. And so basically this gets fulfilled. Another approach that I was suggesting could be, instead of having this where it's harder to find, we basically create a how this thing was fulfilled. So P1 even, P1 even 50 and P2 E2 50 in this case. So this is just another approach of doing the same thing that we currently do with pending incoming wires and expected wires.
Like in our current system?
In our current system, so we have something called so expected wire will have, I'll share my entire screen. So here we have primary wire, pending incoming wire, and then we have list of additional pending incoming wires. So if in our current system we ever had an expected wire of $100, and we had two pending incoming wires, let's say of 50 plus 50, then first one would go into this, second one would go as the first object in this list.
Oh, okay.
So we could do it this way, but this seemed slightly unclean to me, which is why I was thinking that we should instead have another model which records these tuples, like uh, how much is pending incoming wire use. So pending incoming wire usage model. So basically it says that P1 is used in fulfilling even for 50, and then P there should be another record which would say this. But this was just one approach that could be used. This list approach also works if our query
Yeah,
patterns allow so.
right now it is working fine, but yeah, it's not a
Yeah.
priority, can say.
Yeah. Right. We'll go back to sharing my. Yep. So this is something, Ravi, you were talking about earlier, right? So
Right.
basically, how are we going to group these payment records when FICA from IRS from payroll one and payroll two are to be paid together, and state taxes from
Mm,
payroll one and payroll two are to be paid together, but FUTA from payroll one and payroll two are to be paid separately. So this is something very customizable. So in funding records, we had a very clear thing that we would just group it on CTI, comma primary purpose, and
mm,
debit the client. But for this payments, we need to offer certain flexibility to the user. So handling these weird kinds of groupings in the payment. So
oh,
uh, the objective is we might debit the client in a certain way, but then split and combine multiple of these debits in unique ways to pay one or more third parties. So to handle this, we created an interface, payment record creator. So a user of the payment orchestrator should implement this interface, and hence should implement process function and on success function. So the idea is uh, the let's say filings has a very specific use case, right, where they want to handle this uh, groupings in very weird ways. So filings
mm,
team can implement their own filings payment record creator, in which case they'll get liabilities for a certain CTI, for a certain
mm,
purpose, and a certain counterparty ID. So basically, filings can say, "Hey, can you please run my payment filings payment record creator for IRS for this
mm.
employer or for this client X?"
CT for this
Yeah,
is
yeah,
CTA.
for this
Right.
CTI X. Yeah, right.
Mm,
For maybe FICA payment.
mm,
So we basically can get all the liability records which are not really mapped to any payment record as of now, and
mm,
pass it to this process function. And now it's responsibility of filings to look wherever, whether in PTM or filing factory or whatever, and return us a group of a group of liability, a list of liability record groups. So basically, they can say, out of the seven uh,
mm,
liability records that you passed me, group first four with the payment date of tomorrow, group the next three with the payment date of day after tomorrow. And
Oh.
we can, once they return us this grouping, it is not that we have created a payment record yet. We via this interface, basically we are just allowing interleaving of our code with their code. Now we can run all the validations that we want on this grouping, and we can say, hey, we can raise various kinds of exceptions, in which case they also have an on error function which will call, and
Mm.
then uh, once we are done with the validations, let's say a simplest validation could be, are they using the same liability record at multiple places, like in multiple groupings, in which case it is invalid. And after our validations, we can create a payment record and then call their on success method with the payment records, the list of payment records that we created for.
One question. So
Yes.
in the process function, so they give us the list of liability records to us.
No, no, no.
Is
So
it?
they are going to implement this function, which means that when we are calling this function, we pass them
Okay.
all the liability records. So basically, how they register this payment processor with us is, they should tell
Mm.
us that for a
Mm.
certain secondary purpose
Okay.
and counterparty.
Okay.
This is my uh, filings payment processor.
Mm.
So basically, they can say for FICA and IRS, this is my payment processor,
Okay.
and then they can have a separate payment processor for SUTA and let's say California tax agency. Or they can either have the same one or they can have a different one, filing to payment record, sorry, payment record create. So basically, whenever they say invoke, for they sort of have to give us an instruction saying invoke uh, the payment processor or payment record creator for a certain CTI purpose and counterparty ID,
Okay.
and we get all the liability records for that, and
Okay.
uh,
And then
call
we
their
return
process function for their payment record creator.
So why do we wanted to call their process creator first? Let's say they give
Because now
instruction.
in their process, now once we pass them all the liabilities, they can do all kinds of weird groupings, right? Which we
Oh,
don't
okay.
really want to own. So it is a separate code base code. They should have their own processes. They can just
Mm.
call a they. So basically, our uh, record
Mm.
payment record creator runner has a register method. To
Mm.
register method, they can pass a purpose and a counterparty ID along with the processor. And once they ask us to run it, we just are running their code. So any issues in their code, they are responsible for it. It's trying
Okay.
to avoid having people or multiple teams write code in the same place.
Mm-hmm.
Yeah.
Okay. Gotcha. So we return this list of liability records group like based on their code. Let's say we have liabilities to pay IRS for
Mm-hmm.
this particular CA. Let's say we have a liability for to pay a FICA agency on for a particular CTA, and we have different like they said does this, and they in their logic they said like these liabilities should be paid in this particular date, and this liability
Mm-hmm.
should be paid can be paid in the separate group. So they give us a liability record group.
Right.
After that, so
Right.
after
Right.
we create we call the on success is it on the each of liability
Yeah.
records group so
Using
that.
these record groups, we
Mm.
create. So record group is basically a list of liability records along with the payment date.
Right.
And using that, we create payment records and we call on success with this list of payment records.
Okay.
Like
Okay.
if they want
Gotcha.
to use these payment records to later modify certain things, they
Mm.
can give us a call with the payment record ID on different API methods. But otherwise, if they want to store the reference of the payment records, they can, or else they can ignore. And so we also have a default payment record processor, which in case of other people who don't really have any specific handling requirement, we just, whenever we don't find any CTI for a purpose, comma counterparty ID, a processor has been registered, we'll just pick the default processor, which will convert a liability record into a payment record one to one.
1 to 1.
So for each liability record, which doesn't have a whose purpose
Mm,
and counterparty ID don't have a payment record creator map, we just directly
mm.
create a payment record for that.
So even if they're like to the same agency or even on the same date, if they don't have the implementation, we do it
Yes,
1 to 1.
yes.
Okay.
So Prakhar, what will happen in this case? Like you showed, like let's say I'm paying FICA to IRS for 2 runs. So let assume I am filing Steam
Mm-hmm.
from filing team, and now I have clubbed 2 liability records, right?
Mm-hmm.
So will it create just one payment
Correct.
record, or like
It will create only one payment record.
okay, but for flexibility, we have used the data type list. It will, but still contain just one
No,
payment
so now,
record.
so the thing is, you can tell me to create two groupings also, right? Out of the four, you can say group first, second, and third, and group the fourth one separately. So now,
Right.
which is why you will return me two groupings. And so I am assuming that you'll return me a list of groupings. So this is liability record group. This group is implies this is a separate structure.
Okay.
So so basically, it's
Okay.
more like a list of liability records. The inner list contains a grouping, and the outer list implies multiple groupings that you are outputting.
Right. Got it. Got it. Yeah. And this list payment records on success. What's this list payments?
So in case someone wants the reference or wants to do anything with the list of payment records that we created for them, we just give them a callback and they can do whatever they like with it. Like certain people like to have hooks, right? On on
Got
success
it.
call this, on failure call this. So we also have an on failure hook that they can
Yeah.
use to like handle failures gracefully in case they are not able to, in case we throw a validation error to say no, we cannot create this, etc.
Right. Got it.
Yeah. Now I'll talk about the credit ledger system. Any questions on the above?
Not right now. Like, but yeah, I
Yeah,
think I will have to read it through again.
sure. Credit ledger system is pretty easy. So why do
So
we have this? Because sorry, go ahead, Ravi.
yeah, so this is all not implemented, right? It's this payment
It is
orchestrator.
implemented.
It is there now.
Yes. What is not
Oh,
implemented is this expected payment is not
mm,
implemented. So I don't have an object called expected ACH or expected wire. I did not
mm,
intend to use the expected wire we had in our system because I found it not too clean.
okay, okay,
Uh, but yeah, we could use that also. It's not
okay. One
too
more dumb question. So what is the difference between your stuff and this Adam stuff? Now I got like from the payroll and approve, you create liability records and then we separate it out. All these things are
much.
good. What is Adam building on the general ledger systems?
So Adam is building a very generic accounting, so something which can account
Accounting.
for all the things. So basically,
Oh,
Adam is literally going to have something
oh,
like this P account, which will say
mm,
payroll receivables, and it will have a
mm,
debit side, it will have a credit side, and similarly, he is
okay.
going to have this uh, payroll taxes payable, payroll salary payable.
Mm. So these won't affect any in real world scenarios, right? This is only
For now, it is just going to record things.
mm,
The eventual goal, uh, from from what I remember, Nikhil's perspective was this is a system that has to be downstream because accounting records
mm,
things that have happened. Uh,
okay.
However, I think a couple of folks in the team were of the opinion that this should also drive the things. So basically, it might also eventually speak to payment orchestrator or directly talk to payment
Mm,
uh, order system
oh,
where it will create payment orders. But I think the majority opinion was this is going to be
mm,
a downstream thing which is going to record what has happened in the system instead of drive what will happen into the system.
Okay.
But I think that is still being debated. But in
Okay.
any case, what will happen is if company 1, C1, approves a payroll run of 100, this payroll
Mm-hmm.
receivables, so we are going to increase this amount, right? So we add it on the debit side because debits increase this account. So
Okay.
C100 will be on debit side of payroll receivables. This is
Mm-hmm.
something we have to pay out. So it's like our balance is going in negative here. So we put in credits. We need to pay out $20 to IRS for this company, $20 to
Mm-hmm.
the state. We need to pay out. So employees payable in the credit side will add another uh,
Mm-hmm.
$20 for the
Oh,
employee one, $20 for $40 for employee two. C1 has to pay.
oh,
Right? On behalf of C1, we have to pay. When C1 actually pays us money, now
mm,
they have paid. So receivable, are we going to receive any more money? No. Earlier we were
no.
going to receive 100. So we need to reduce this amount. So we put it on the credit side because credit decreases the account value.
Okay.
Earlier we had to pay someone. So now do we have to pay? We don't. So
No. So
we
we
put it
could see
here.
one.
So it will start recording these things also. Now, one thing
Yeah.
that can be slightly challenging with respect to add-on system is engineers
Mm,
also need to understand slightly when they are trying to record things onto the accounting ledger, which side
mm,
do they want to record it and which T accounts do they want to record it, because an account will be is technically identified by a name, in his case maybe ID, but
mm,
you, without looking at chart of accounts, you have no idea of what accounts exist, so you might end up creating more than one account. Maybe someone says payroll receivables, maybe someone says payrolls that Rippling is going to get. You might
mm.
name the same account with the same meaning as multiple names, but I think that
Oh,
is something that need that
so,
might be
so
handled in a
we
different way.
already
Or
have these accounts separately.
yeah, these are all separate T accounts. So what Adam has created in his PR is basically a generic
Oh,
T account, and you can
okay.
basically
Mm. Arcus, like
so you
create
can
this TL.
basically say GL dynamic account or something. I think he says dynamic
Okay.
account, and then pass a name equals uh, payroll receivable, maybe
Okay.
something like this. Receivable. I'm
So
sorry.
in the actual world, each account is different, or it is like just a grouping on the same account.
No, in actual world also each account will be different. So in
Okay.
fact, you will have a cash account,
Mhm.
which will also have debit and credit sides.
Mm, okay.
So basically, let's say if if you convert cash into a credit note, so you will decrease the cash. So you will put something on the credit side, and on the credit note, in the credit note account, you will put something on the debit side because you are increasing the credit note account amount. So
Okay.
you can basically have the granularity at which you need to create account is something accountants decide based
Okay.
on what they like or what they are comfortable with. But now someone would say payroll receivable can also be broken down into three accounts: payroll receivable via ACH, payroll receivable via uh,
Mm,
buyers, and payroll receivables via debits initiated by Rippling, maybe ACH debits initiated by Rippling versus ACH credits initiated by that company. So what I'm trying to say is there can be different levels of granularities within the accounts. So there is
yeah.
no rule of thumb that you should create a cash account, you should create a payroll receivable account or not. It sort of depends on your opinion and your choices.
Okay. Okay.
Quickly coming back, since we digress to the general ledger thing, the credit ledger system is basically a way to incorporate what currently payroll filing team is doing via payroll taxes draft and garnishment objects that I think many of us have looked around several times now. So what happens is now you can always overpay pay the client, maybe because Rippling made a mistake, or maybe because the client actually ran a payroll run, and now the client is creating a correction run which reduces its tax liability to the agency. So based on how this overpayment had happened, there can be two kinds of credits based on who made this error or who earned. Now if it is the types are Rippling owned and client owned. This occurs when Rippling due to its own fault, overpaid the agency. The client paid us only $100, whereas we paid to the agency $200. Now, one thing to remember is whenever we make an overpayment to a tax agency, the excess amount at the end of the quarter or at the end of the year is always refunded into the client's account. Exception is for PO companies who file under the name of Rippling. The refunds are made to the Rippling's account. Otherwise, always the refunds are to the client's account. Okay. So now, given that Rippling made an overpayment, let's say Rippling paid $200 instead of $100 that it had to pay. Rippling in the future will continue to debit the client for uh, its normal tax liabilities, but while paying it to the tax agency, Rippling should be cautious and pay less because Rippling has already paid more to the agency, right? And try to adjust the overpayment that it did over time before the quarter or the year end. Is this clear? I'll talk about how is it handled, but is this part clear? Rippling owned credits.
Like, what do you mean by slowly recover? Like, won't it like
So
my
in the next
first
payroll run, in the next let's say in the first payroll run, the client owed $100 to IRS and Rippling paid $200. In the next payroll run, let's say the client owes $50 to the IRS. Now the Rippling should debit the client for those $50. However, should short pay the agency by $50, and Rippling had a credit of $100, right? So instead, it should just pay out $0 to the IRS.
Okay.
So, and now it will need the third payroll run to adjust more credits in the next
but
subsequent
it's
payroll run, right?
aggressive, right? Like if the next one had like $100,
You
then we
want
would
to
have
you want to
just
recover it as aggressively as possible, true. So maybe slowly is the misleading word here. By slowly, I don't mean that don't recover it aggressively. I just mean to say that you have to recover it in maybe one
right.
or many more subsequent payroll runs. Whereas in a owned credits, the client had actually created a payroll run where he or she owed to IRS $100, and now because of a correction run, we expect the client owes only $50. So now $50 should be recovered. So now the funding amount, so like the client should be debited by $50 less than the next payroll run, right? So maybe the next payroll run says the client has a tax liability to IRS of $200. We know that the client already has credits which are client owned to that IRS tax agency, and hence we should only debit the client for $150 instead of $200. And similarly, while paying to the IRS agency, we should short pay the agency by $50, and hence instead of 200, we should pay only $150. Now, how this is handled in current world is via this payroll taxes draft and garnishment, payroll
Right.
tax, payroll run taxes and garnishment draft. It's
Right.
called this model.
One more question, Prakar. Like in the rippling
Yeah.
owned errors, so it is not we just paid extra to the agency, but we didn't charge the client that amount.
Correct. We paid it by mistake of our own. So let's say we processed the same ledger
Got
entry twice
got it.
and paid the
That's
agency twice. That has happened in the past, right? And it has
okay.
happened not once or twice. It has happened so many times that this is like a real scenario that we want to build inside the product, that we handle it
And
in future easily.
for the client want, if we do it within that quarter, right? Let's say you created a correction run for this quarter, and we reduce the funding amount, and we pay the IRS like lastly in the quarter end,
Mhm.
right? So we paid the amounts by consolidating everything, and we don't need to short pay also because we already have the credits and we consolidate everything and pay correctly to the IRS. Let's say they created a correction run for a run in the another quarter,
Mhm.
which reduces the tax liability. So how do we gonna recover that from the tax agencies, like that amount? Let's say for the client owns
For
it.
another quarter,
Yeah, yeah.
for a previous quarter, I think we can still file amendments, right? So now different tax agencies have
Mm,
certain durations.
okay.
As in, until when can you file amendments? Let's say it is 3 years. So until 3 years back, if there is any quarter for which the client actually changes or creates a correction run, we automatically trigger creating amendments. So I think there is an ETA which runs daily to figure out if there are to be any if there are any amendments to be created. Once an amendment is created, now see, this creating of credits in the system is not our responsibility. Our responsibility is only to aggressively apply these credits to recover amounts or
Okay, okay.
short pay agencies,
Uh,
basically. So
Mhm.
now the filings team can decide based on if the amendment is in previous or prior quarter, it is highly likely that the tax filings team will not create credits in our system because these
Okay.
will anyway be refunded to the company. However, when it is for a PO company, they might actually either create credits or directly create refund liability records, which is like liability record which Rippling is liable to pay back to the client because of certain refunds due to amendments. Is it clear? Now, if it is clear, I can proceed on to how we handle this. Hello.
Yeah.
Yeah.
I think yeah, like PO is not actually exception. It's just because we are co-employer, right? So
Correct, correct.
yeah.
Not an exception, but by how
Yeah, yeah.
how is it
But yeah,
defined?
how we are
Yeah,
right.
correct. So how we handle it is very simply, we have the liability record that I was talking about initially. This actually contains three amounts: the actual amount, the funding amount. Now, funding amount can be less than the actual amount. Why? Because there could be client owned credits applied to this liability record. And then there is a payment amount which can be less than the actual amount because we could apply rippling owned or client owned credits to this. How these credits are used is recorded in a model called credit usage records. I have put more code references over here, like the model references. But we have a model called credit usage record, which records basically which how much of the credit got used in applying to which liability. Basically, it contains nothing but just a simple three tuple credit C1 applied to liability L1 for amount $30, let's say. And so
Mhm.
now uh, credit used amount, so this credit record will contain a used amount, the total amount, and remaining amount. Two of the three are sufficient, I think, but using that, we can basically continue applying the credits until a credit is fully used.
Okay. On a liability record.
Yeah, correct.
So,
So yeah, that is all that is there to the system.
yeah,
A lot
it's
more detailed documentation is over here,
yeah,
and
give
some of the
this.
models which are important. So I created a lot of so now liability creation is also owned by different teams, right? So I created a lot of different protocols, or people could extend these protocol classes to create their own classes. So now liability creator protocol is like the base one. Now you could create liabilities for the payroll, for the taxes, for the garnishment. We own only this part. This should go to the filings team, and this should go to the filings team probably. Or if filings and garnishment ever split, then to that team. So, which is why I created it in a way that they could implement their own classes, they could keep it in their own packages. We could just they just need to register or change the base class at our place, and we just call certain functions to help create those liability records. And liability records are the only instructions the system needs. Everything else we create ourselves, and they can modify this process of creation of our payment records using these that we discussed, payment record creator interface implementation of these. So
Mm,
I know there was a lot that we covered in this session. So in case there are any questions now or even later, I am available to
yeah.
discuss those.
Can you share this like this PPT, Prakhar,
Yes.
in the Google in the chat? Just one more.
I'll also
Ping
stop
it